Welcome back, everyone. It's great to be back for day 2. I certainly love that video. If only we all could have our own MI6 agent delivering money around the world, we wouldn't have to have things like Ripple. I thought yesterday was great. There are 3 key themes that I heard yesterday that I wanted to take a moment to recollect. The first one is the theme of the conference, and where I started off yesterday, was talking about this idea of being connected. I thought one of the highlights of yesterday was the lightning round, maybe more crassly called the speed dating round. And I heard great feedback from lots of people in the room in terms of the conversations, the connections, the opportunity to build business around that. The second one that I took away that I was very excited to see is the regulatory engagement. We had a couple of different panels talking about how governments, how regulators are thinking about this. The thing that strikes me that I think we lose sight of is if you go back 2 years, go back 3 years, and you think about the conversations we were having with regulators about blockchain, about digital assets, and you reflect on what we heard on stage yesterday, it's amazing how far we have come. And I think it continues to be the case that if we are solving real problems for customers, if we're doing it in a regulatory compliant way, where we're not changing the dynamics that are existing around everything from capital controls to KYC, that there's a lot of goodness there, and you're seeing governments around the world, I think, lean in. The third thing I think I saw yesterday is we really have reached a tipping point. Anytime you see the network effects building around these types of new technologies, particularly when you have network effects, where the more participants, the more valuable it is to participate, I really feel like Swell 2018 compared to Swell 2017, I imagine many of you, like me, felt that contrast and how real it has become. As opposed to just science experiments, you're seeing real, tangible go-to-market from very large banks, payment providers around the world. So I'm going to turn it over to a session I'm very excited about. We, working with an outside firm, commissioned some research around blockchain and digital assets. And I'm going to invite up to the stage Cory Johnson, our Chief Market Strategist, and Alenka Grealish, the Senior Analyst at Swell, a consulting firm. I'm not going to steal their thunder, but they're going to share some of the key findings from that research now. Thank you very much.
Please. So yeah, the idea here is to kind of put some numbers and some real research behind the notion of what's happening in our financial industry as it relates to the acceptance of the idea of blockchain and digital assets. And of course, we talk about this endlessly about in terms of kind of what the opportunities are and how big the market opportunity is. And so let's sort of get our handle around that first. And we're going to publish this research as well, so everyone can have this to sort of use to refer to in the future. I think this is really groundbreaking work. But when we look at this notion of connecting the global economy and just how big the market is here, we're talking about a very big market. And I think frankly, it's a testament to what Brad and Chris have done in terms of focusing this technology on one big problem. In terms of what's at stake, well, there's a lot of money. The work we've done says that there's $27 trillion in payments, but that's about to grow dramatically. The figure in red that you're seeing is where we expect the world to be in 2026, which is right around the corner. And that delta, particularly in APAC, right, the delta between where we are today and where we're going is really dramatic in terms of the growth we're about to see. But it's already a huge business. So again, $27 trillion, going to be probably $47 trillion by 2026. The world's very different, right? And we know this in a lot of ways are important when it comes to payments in terms of how many people are unbanked but using mobile phones. It's a huge market out there. The trillions of dollars, we found that there's $10 trillion, number that Brad mentioned yesterday, just sitting in Nostro accounts waiting to be used. I mean, think about this in a time when we have truly efficient companies like Amazon, of the Amazons of the world, so focused on return on equity and return on capital, and yet there's $10 trillion waiting around to be used, that inefficient use just cannot last in this modern economy, particularly as the world is so used to getting things right now on demand and not waiting for anything. That's kind of the standard by which people expect things to happen right now. So when we look at blockchain and the solutions it offers, it can start to make a difference there when it comes to payments. So what we wanted to really understand is, where is the world in terms of its acceptance of this idea of blockchain, number one, and digital assets, number two? And when is this sort of cutting edge interest that everyone in this room represents, when are we going to not be the weirdos anymore? When are we going to represent the mainstream? And is that on the horizon? So when we looked across the world at who we talked to, let's talk about who we sort of interviewed in this process.
So in our quest to gauge where are we at, how close are we to the tipping point, we reached out to nearly 700 professionals across regions, as you can see here, quite diversified, reflective of GDP share. And across company sizes, so we've talked to small firms, large firms, and a variety of professionals from your mid-level up to your C-suite. And importantly, we also looked across industries. We surveyed players in financial institutions, as well as non-FIs, in particular IT companies that would say we're first a messaging app provider that provides payments, or we're a accounting software provider in the cloud that provides payment services, and across segments, so serving consumers, small business to large corporates. And hence our results, I think, reflect the diversity of the market opportunity for not only blockchain, but digital assets as well. What was striking to us is how far we've come. You know, just in the past 5 years, from the weirdos to mainstream, we found a striking percentage of innovators, those in production, 7%. On the heels of the innovators, the early adopters, those nearing production, we're at 11%. So already we have 18% that are helping push the envelope to the early majority, those either in pilot, proof of concept, or close to proof of concept. So cumulatively, we're already at 45%, which is telling in terms of the tipping point, because somewhere between that 18 and 45 is when we're going to see the tipping point. And Cory, you can
well, I mean, you know, if you're in this room, you're probably on the innovator side of things, right? You've been there at the cutting edge. You've been there on the front lines. But what we're really seeing is we are right on the cusp of massive adoption based on our survey results. We're talking to people who are making decisions about what they're going to do, who are really actively looking at this technology, and this mass adoption, this tipping point for that mass adoption, we're right on the cusp of that right now. And I think we all imagined that a year ago this wouldn't have looked anything like this, but that the world that might have been thinking about blockchain as something, you know, mysterious and risky and confusing is really taking some time to understand it. And I think, you know, it's reflective in what we see in this industry, with 45% of the people, as we show in that study, already close to signing, if not already using a blockchain provider. And when we sort of dug a little bit deeper into these numbers and looked at who these people were, what these companies looked like, I think the most interesting part of this, you know, in the innovators, the early adopters, the majority, the late majority, and the losers who will be left in the dust. You know, and let's we can joke about that, but let's remember how dominant a company like BlackBerry was not too long ago, and completely missed the boat in evolving technologies. It was one of the dominant technology companies of the last 30 years. Is nowhere to be found today. But those early adopters and early majority, who are really the really big group in the middle of that bell curve, they are really going from sitting on the bench to getting involved and actually taking action here. And I think that what we're seeing is there's sort of two groups here, really. Those who are happy with the status quo, and those that are looking for change. And I think one of the interesting things about this part of our study, too, is that we found that a lot of the financial institutions in particular, and maybe you can put some color on this, thought their customers were happy. And yet, when we looked at other studies that looked at their customers, we found out their customers were not happy. And I think it really shows you that they have a notion of a need for change, but not all of them recognize how desperate their customers are for that change. But those who do are likely to reap a big reward because they're going to provide something to the marketplace that their competitors don't see as necessary.
Yeah, I think it's interesting when you envision a scale with the status quo on one side and the forces of change on the other. We are seeing the status quo weighs pretty heavy, but that the forces of change are starting to dominate. But in terms of the status quo, it was striking how comfortable respondents were. Our customers are happy. We have a competitive advantage. you're hearing echoes of BlackBerry here, right? And pre-funding's a necessary evil. At the same time, they think they're in a groove. They're starting to recognize it could become a rut, in that there could be a better way.
I like that, groove and rut. That's good. I'm stealing that one.
I've been practicing that one. That there could be a better way, that pre-funding is not necessary. There could be alternatives, that real-time gross settlement is feasible in a cost-effective way. That blockchain actually has advantages, and you know all about the advantages.
Well, and we've heard this sometimes from some financial institutions who say, what's the matter with settlement? You hear this when you look at our competitors out there, Swift, and like, who needs to settle faster than 3 days? What's the matter with waiting 3 days? But I think, you know, to the classic Steve Jobs quote, right? A lot of times people don't know what they want until you show it to them. And I think that that's what we're finding, that they're sort of poking around blockchain, but there's actually a lot of, as we mentioned, a lot of implementation happening. But that across the board, the people that we surveyed think there is an opportunity to grow using these new technologies, possibly by adding new products or just changing the way they're going to do that. The question is, what's going to drive that ultimately? And what the things that are sort of offered by these solutions are different, right? There's speed, there's access in terms of both security, but also controlling who your partners are financially. There's a lowered cost, and then there's a transparency of seeing what's happening to your transaction. There's no more mystery. I often compare Swift to a homing pigeon, where a message goes out in one direction. Maybe you get a pigeon back, maybe you don't. Maybe there's some errors along the way. You don't know what's happening in that process. It's not like Game of Thrones where the raven always shows up. It's actually a homing pigeon. It's remarkably successful for pigeons, but it's not what we need in this global economy. And what we found in the study was really interesting to me, that there were the multiple benefits had a really widespread attraction. I kind of might have expected that a lot of these would say, hey, the lower cost is why we're doing this, or the transparency increase is the reason we're doing this. And what we're really seeing is it's really across the board. There's all sorts of drivers. There's a belief that speed's going to be important. There's a belief that more connections is going to be important. There's a belief that low cost is going to be important. There's an almost equally strong belief that transparency is going to be that important. But then there's the other question, right? So there's the software aspect, but what about the digital assets? And you know, I often get the question on the road, you know, are financial institutions, our technology providers really going to be comfortable using XRP? Are they comfortable with digital assets? And we've shockingly found that of all the types of people we surveyed, there was a real acceptance of this notion of digital assets improving as a settlement vehicle.
Yeah, so we coupled questions around blockchain to naturally digital assets, the next step change. And it was striking, if you look at the results, how extremely interested people are. We have 33% extremely interested and 41% very, for a strong majority of 74%. And I think what was really striking is that it was the non-FIs that had an above-average interest. So those players offering messaging apps, accounting software, remittance only, and so on, that had a great appreciation of the potential here. And we also saw that the mid to large companies were more interested, perhaps because they had intercompany payment issues and were already thinking about, can I use some digital currency to do intercompany, and then perhaps do B2B or B2C. So it was pretty consistent, the strong belief in the potential here. And interestingly, the expectations of digital assets were similar to those of blockchain.
Yeah, and again, you know, if you think about what, you know, the services younger people are using and comfortable using, it is those messaging apps, it is that instant technology, it is the Ubers of the world and the Lyfts and so on, that kind of real-time demand for the things that those consumers want, and businesses also responding in that way. That's certainly the way of the world going forward, and we're seeing that those are the very same people who are the strongest interest in blockchain and digital assets as a potential solution. And again, it was the numbers are really big. I mean, those people really wanting to adopt this were across the board, but also showing a very strong interest in all the attributes that can change their businesses. And we might be the weirdos in the room right now, but this room is going to be a lot more crowded in the very near future, as we can see from our studies. We want to get some questions from the audience too, so if, as it relates to what was found in the study. So let me open it up to the floor. If we've got any questions, we might even have a microphone out there somewhere, or we could probably just hear you. Anybody? See, oh, right there. Yeah.
Question.
Go ahead.
Just a question on the value of data as a part of what the platform offers. I think transparency was one of the benefits there. Is that where that fits in? And was there any feedback on the enhanced data that can go along with the digital asset settlement?
We didn't address the data part of the equation because we wanted to focus on just the payments use case. But certainly that's an important aspect of it. And this is the inaugural study. And so that kind of input is helpful to inform the second round of survey.
Yeah, I mean, I'll say when I talk to financial institutions in particular, the mystery of what happens with a SWIFT order, with a SWIFT message. You don't know where it is along the corresponding hops. You don't know where it's stuck. If there's a problem, you don't know where the problem was. You also don't know, part of that transparency also reflects the transparency on cost. In the correspondent banking system, you just don't know what each bank is going to charge along the way. And so the banks might make money in a transaction, they might lose money in a transaction, the remittance companies, they don't really know. And that transparency is, as we saw from the study, greatly in demand. Over there.
Hi, did you ask them about impediments? What could be areas of friction to adoption at this stage?
Yeah, absolutely. And regulatory uncertainty was clearly one, and that's why it's a main theme at Swell this year. And I think also just education around the technology capabilities. I think we've come a long way maybe, but there's still education needed around security and such. So those were a couple of the common things cited.
Let me ask you, did that differ because there are places where there's a lot more regulatory certainty than, say, the place we're in right now in the United States?
Yes, there is some differences, but marginal. I wouldn't say there was a striking delta between two regions on that.
Other questions?
Over here. This is fantastic. Thank you very much. Be interested in knowing when you're going to publish the results. But the question is, could you talk a little bit more about how you identified the 700 people and companies specifically that you chose to speak with?
Sure. We relied on professionals to do that. We contracted with a third party who is skilled in this and was able to collect an appropriate sample for us based on our parameters. So we counted on them to get it right.
And we expect to have it published shortly. There's some copy editing to be done, but we're at that final stage, and it's interesting research. I think it's going to be super interesting too for this group because we're all in the thick of it. What else have we got out there? I can't see very well, but anybody? Over there.
Did you delve into 2 points? One was the transaction within a country or cross-border. Did you look at whether the transaction being cross-border or within a country made a difference? And secondly, whether the transaction scale mattered, whether there's a threshold value below $100, above $10,000, something like that.
We did look at the type of transaction, whether it's domestic or cross-border. And what was interesting is there was interest in domestic when our ingoing assumption was it's going to be dominated by cross-border. So I think it's telling that in certain markets there is a domestic potential because the infrastructure is just inadequate.
And we've seen that with some of our clients too, where there are some countries where the pain points are so great that they actually look at things that we've sort of imagined as a cross-border solution that's actually useful within a single country.
And we didn't ask about transaction value thresholds in this one, but that's an interesting question to put in the queue.
For round 2.
Yeah.
What else we got? Anybody? Well, let me ask you about round 2. What do you imagine? Usually you do a good survey like this, you end up with as many more questions than answers. We got a lot of answers.
This inaugural survey gave us a sense of the beginning of what we call the S-curve, the kind of hockey stick tapering, and it'd be great to see what that next part of the S-curve, the early majority, looks like. And I think in a year we're going to see some striking movements, and perhaps we can definitively say we're at the tipping point.
Well, I think one of the reasons there's so much interest in the cryptocurrency part, I use that phrase almost pejoratively, but there's such a great interest in cryptocurrency, I think, because the use cases of blockchain haven't really evolved. You know, I make the case Ripple's probably further along in the development of the use of blockchain and in the use of digital assets than any company out there. That the real big companies in the space are the companies that are trading with digital assets as opposed to actually using them for something. But that ultimately the long-term value, the intrinsic value of those digital assets will be in their use, not their imagined scarcity or their quote-unquote store of value. I think, you know, furthermore, I think one of the reasons that the world is so excited about this space, and it actually probably helps all of us providing solutions, is in the value of, or the price of, not the value, but the right price is what you pay, value is what you get, Ben Graham. The price of these digital assets and these cryptocurrencies and so on. And I think that there was so much confusion about it because we didn't see use cases coming into the world yet, call it a year ago or 2 years ago, but we definitely saw the prices running up, and we saw the breathless commentators on CNBC and the morons on Bloomberg. I was one of those morons. Talking about buy, sell, the price is up and to the right. And it could have been gold, it could have been Bitcoin, it could have been the price of oil, it could have been, you know, shares of Tesla. But it wasn't a thoughtful conversation about what the technology really was and what was possible. You know, in the early days of the internet, there was no dollar sign attached to the nodes of a network or the packets on a network. That because there's no dollar sign, the creators of the internet thought they could propagate these networks for free by giving it away, and that would make it grow really fast. I think the creators of digital assets said, we can make this new kind of network grow really fast by putting a price and putting value on it and rewarding the people who propagate the network. But the resultant attention paid to the rising price of that, I think got people really excited before those use cases were here. But now we see the cart really catching up to the horse here in terms of interest throughout industry in the world of payments in particular. And we see that all over the world, and we see that with all different size companies, and we saw that, well, different types of companies that have anything to do with payments or an interest in payments.
Yeah, I think what's interesting is in parallel with the hype around the price point of Bitcoin, et cetera, we're seeing the pragmatists come in. Digital assets as a medium of exchange. And what was also striking within this survey is those that are very interested in real-time gross settlement. They're getting impatient, and they overall are very interested in digital assets. Like those that are extremely interested in RTGS, 95% are extremely interested in digital assets. So I think we're seeing these pragmatists saying, okay, it's time now. We really want to get to real-time gross settlement, and they're going to influence developments in the marketplace.
Yeah, and again, as these things roll out, I think we're going to see a different understanding of what this industry has to offer. Any more questions? I can't really see out there, so you might have to yell. I'm saying no. Why don't we just jump ahead to the next?
Excuse me?
Yes.
One more question. So, here.
Thank you.
So, do you think that in the future it will be more pure public blockchain, private blockchain, or hybrid that will become the mainstream in the enterprise solutions, especially for payments?
I mean, I think one of the things we saw from who knows is the answer, but what we saw in the study was, and to me, really surprising acceptance of the idea of digital assets as a functional part of a blockchain solution, that there was a real strong interest in those assets, you know, not being a separate thing, or, you know, you might have, I expected certainly more nervousness or skittishness around the use of digital assets as part of a blockchain solution, but the survey found quite the opposite. Fair to say?
Mm-hmm, mm-hmm. And I think we're going to see consolidation. Like any healthy marketplace in the early days, there's a lot of experiments, and gradually you consolidate to those that are actually achieving the network effect.
Anybody else? All right, let's get on to the next panel. We got, thank you very much.